Hey guys, welcome into the Flow Zone. My name is Renko, and today I just wanted to do a quick video because some people in my private messages are asking me how to interpret delta in trading. So let's go over this real fast. Firstly, what is this mysterious triangle called delta? Well, in ancient Latin, delta means a land enclosed in rivers, and it's also the fourth letter of the Greek alphabet. But in trading and the rest of the world, we use it to express a difference between two factors. For example, we have buyers and sellers. Delta will be the net difference between both of them. So for example, if we have 100 buyers and 200 sellers, we subtract them and get a negative delta of 100. Now, if we have 200 buyers and only 100 sellers, we get a positive delta of 100, like this. So how can we see the delta on our screens? There's a lot of different ways. One of the ways is with a footprint. A footprint chart will almost always have a kind of color scheme where we can interpret the delta based on the colors. Like this really bright red area, we know there's a lot of more selling delta. And these green areas, we can see there's a lot more buying delta. Now, let's go over this. For example, this morning, let's make this bid ask a delta chart. So now we have a delta footprint chart. Prices were going up. We have a lot of buying here. 18, 33, 38, 53. So we see the delta is stacking up, which means there's more and more buying power coming in as we go up. As we near the top, we go from 70 to 30, 71. And as we can see here, 87, 24, 2. We get at this same price as this 87. We go to 62 delta, 30 delta, and then we only have 1 delta. So this means the difference between buyers and sellers at this point is only 1. Same with the prices going up here. Again, the difference between buyers and sellers at the top is only 1. So we can interpret there is no more buying interest right here above. Price starts to sell off, and when it sells off, we get 61, 85, minus 114, minus 132. So we see stacking of selling delta. This is one way to interpret it. One way to further interpret it is, I will take the same bit here. This is a 15-minute volumetric chart or footprint chart. We can see the bar statistics right below here. Our highest bar is the buying volume, and the second bar is a selling volume. So if we can do a little math for ourselves, 1,050 buyers minus 1,151 sellers is a delta of minus 101. We can also see the percentages per bar, minus 4.6, minus 4.7. And here we go positive again. You see in this big bar, our bar statistics are overall negative, signaling a short is in play. As we can see, next bars are also very negative on the delta side. Now sometimes you can see delta divergence through these little things, like right here, the last bar we are forming now. We have an up bar, but all of our delta is going negative, which means we have delta divergence, which means the aggressive sellers are pushing down, but prices still keep going up. Now we have to interpret for ourselves why that is. Is it because there's a lot of passive buyers buying up the aggressive sellers? That might be a good place to think about. So here we see a lot of green delta coming in, which means buyers are pushing back up, and that's why it is. So the next way we can get a little help to interpret our delta is with a delta volume profile. Here we can see every aggressive order has been formed in the past. This is a composite, so it will adjust itself the more I scroll my chart. This is used more to get delta zones. Like here downstairs, we can see huge selling zones with a lot of selling activity, which could signal absorption. Absorption is something we talked about a few days ago. So here we can see absorption level. A good trader might mark this level on his chart and maybe get a little marking on the POC. So if price returns here, we can watch what the delta does. As we can see here, we have a lot of absorption going on in the middle of this move. So this is a no trade area for me. We can break through, but then we will have to retest this buying zone right here. Now there is a fourth method of looking at delta, and that is with the cumulative delta indicator. Now the cumulative delta is a strange way to operate, but what we're actually looking for with cumulative delta is divergences. So right now we can see, I'll draw a line like this. We can see we have a downtrend right there. But in the same area, we can see delta moving up. For me, this signals, if prices go down, but delta is moving up, this can signal a possible long, especially when the delta is taken out right here. I'll draw another line. When the delta is going higher, the point where this delta gets broken is a point where we should attempt a long. Take a look, it's right here. So here we can get a nice long signal and we could catch that move. So this is in a nutshell what delta is. This is a really fast explanation of delta. I will go deeper in this in upcoming videos, but I just wanted to answer some people very quickly on what delta is and how we can use it to make our trade decisions. So as always guys, if you find this information helpful, drop a like, drop a comment, share this video with all of your friends, and I will see you in the next video.